as it's all set to pull out of the British operations a decade after it bought into those Corus units. Investors, in fact, cheered that board decision against an unaffordable plan offered by the trade unions and the British government. The stock price as well was one of the top gainers on the Nifty, surging a good 6%. Here's 18 Hours' Ashwin Mohan in conversation with the Group Executive Director, Koushik Chatterjee.
So I would like to just highlight a couple of things. One is the fact that the decision is to look at all options, including a sale option, and that is what the Tata Steel Europe board has been advised to consider and implement, and as you rightly said, in a time-bound manner. The background of the asset value is important to state that these are largely impaired assets, and therefore it's not a valuation exercise by itself. It's more a risk-reducing exercise from a Tata Steel point of view. So I think one needs to keep that in mind because at this point of time in the cycle, as well as in the context of the fact that the assets have been largely impaired, we would essentially see the risk profile and not want to increase our exposure into the UK, which has been backed up by Tata Steel for the last 8-9 years, including with resources, capital, and so on.
All right, point taken, Koushik. Now, moving on to the second aspect, and that's, of course, ongoing discussions, and this is, of course, with Greybull Capital. Can you give us an update on the status of negotiations with them? Can we expect a firm announcement anytime soon? Are you in talks with any other potential suitors? Some light on that front.
So our transaction with Greybull is proceeding. We are in engagement, and if I may say so, that it is in advanced engagement. And the fact is that again, those assets are also impaired. So it's not again a valuation issue, it's a question of exposure issue. And it's going through the same nitty-gritties of any transactions of this size and nature in the context of the fact that there are contract novations, there are long-term contracts, and there are various other regulatory and other transfers that needs to happen. So that is the process that is currently being undertaken, and when it is finalized, we'll certainly announce the same.
All right. Now, what's a manageable level of debt for you? And of course, if you could also throw some light on how much do you want your net debt to be reduced by?
So I think it's a function of your earning capacity, and at a point in time when the earnings are at a much higher and robust level, any company can absorb more debt, provided that debt is used for putting across in meaningful capital investments. And therefore, I would say that as far as debt servicing is concerned, today we do not have pressure as far as repayments in the near term is concerned. But from an overall balance sheet structure perspective, we would certainly look at rebalancing it going forward. It doesn't happen overnight. As you earn, you repay or prepay, and that is what we will look forward to as markets stabilize a little bit and life becomes a little bit normal. We would like to reduce our debt profile, use prudent capital expenditure principles, and ensure that for example, the asset that we have created in Kalinganagar is a brand new state-of-the-art integrated steel plant. We expect that that asset will match and be better than Jamshedpur in terms of its operating profile, cost competitiveness, and so on. And that gives us another opportunity to recapitalize in terms of internal recapitalization of the balance sheet and reduce our debt profile.
On that optimistic note, let me also ask you, if it comes to your entire UK pocket as a business, how much does it contribute to the overall top line and volumes, and how much has it dragged down the EBITDA?
So as far as the top line is concerned, it is about 7 million tons between the two hubs and the rest of the businesses. So from a volume perspective, it is certainly material, but as far as from an operating profit perspective, the last 12 months have been very significantly negative. So if at all, things will improve once this moves out of our portfolio.
Coming back to the potential divestment plans, now these kind of divestment plans are very sensitive, especially from a labor point of view, and therefore I want to ask you, is there a potential compensation package that Tata Steel has in mind, keeping in mind that there might be several thousands of workers who would be affected once these sales fructify?
So I think fundamentally when you look at a divestment, you are looking at sustainability of that business. So a new investor, I would believe, should see the value of the assets and the people on the ground. So in which case the chances of the jobs being preserved is much higher than being taken away. So I think even in a greybull consideration perspective, we feel that we have done a significant amount of restructuring in the past. Going forward, the new investor and the new operator will find that as already a done thing, and they can make the business more sustainable. If there are further restructuring, it's their call. But effectively, if you go through a divestment process or a sales process, you enhance the chance of preserving more jobs.
I know these are early days, but is there a potential compensation package at all being mulled upon as of now?
No, it's as I said, it is yes, it is less than 24 hours when the board has advised. So there is no compensation. What do you determine that compensation on? Because if you're looking at a sale option, if you're looking at other restructuring options, unless you have a framework, what compensation will you determine? So I think it's not a fair question at this point of time.
What's your outlook on the steel scenario in terms of prices? We saw some movements in March. Have we reached a bottom?
In India?
India, yes.
Yeah, I think the MIP has been a very welcome support to the steel manufacturing sector in India, and I think the entire sector thanks the government for taking such steps, because it is important to ensure that the domestic economy and the domestic robustness of the manufacturing sector, especially in steel manufacturing sector, is protected, and against what I call unfairly priced imports, because it's not that Indian industry or Indian steel sector is uncompetitive. It is if you do the global cost curve, you will find that it is very fairly competitive. In some cases the benchmarks, and therefore I think it was a price issue than a competitiveness issue, and the government has rightly acted in terms of promulgating the MIP, and it has given a lot of relief to the companies who can then focus on operations, competitiveness and commercials to be lot more robust.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.